Now, let's make sense of this right away. The Director of Research and Strategy at the Chapel Hidden, Mr. Tajudeen Ibrahim, joins me virtually now. Thank you, Mr. Ibrahim, for joining us. I appreciate your time. Now, let's get started, Mr. Ibrahim. The Consumer Price Index, as reported by the NBS yesterday, shows that inflation has risen to a new high of 18 years as figures rose to 27.33%. From 26.7% in September. Is this in line with your expectation, if I may ask, or does this beat your expectations?
So I will take a look at it. Thank you to start with for having me on the show once again. Let us take a look at the inflation number from 2 to 3 perspectives. The first perspective is around our expectation. We actually were expecting inflation to print at 27.24%. So the inflation number we have is only 9 basis points above our expectation. The second standpoint is to take a look at the inflation number from a market perspective. The market consensus was an expectation of inflation to be at 27.73%. So which means that the inflation number that was recorded is slightly below market expectation. And the broad view in this case is that, generally speaking, analysts expect inflation to go much higher, when it was reported. And so it came in broadly in line with, the expectation for higher number. And if we look into the rest of the year, the expectation, remain, on the upside in terms of, inflation outlook. The third perspective, to my mind, is around the month-on-month inflation number, and that is where I think, Nigerians generally should also, pay attention to, because on a month-on-month basis, inflation has moderated 2 times in the past 3 months. The first moderation was in the month of September. The second moderation that we have seen is in the month of October, down to 1.73% from 2.1% in the month of September. So my sense is that if we can maintain, or if we see this deceleration in inflation, being maintained over the next, 2 months, then it is likely that Nigeria ends 2023 on an inflation number that is below 30%. But if this trend is reversed, we are expecting inflation to print at much higher than 30% before the end of 2023.
So what you're saying is that if you look at the month-on-month basis, so there's a deceleration, but the headline inflation, of course, has risen from 26% the previous month to 27.33%. So is it a good sign if you have to compare it, month-on-month?
So month-on-month is more much closer in terms of monitoring the trend, and also in terms of trying to understand the impact of monetary policy, decisions by the central bank. So that is largely, reflected in the monthly, numbers. But if we are taking a look at it from a year-on-year basis, the pressure is material and it calls for concern. And that is where, when you look at 27.33%, what it indicates to average Nigerian, is that you are now paying 27% more to get, goods and services on average compared to what you were paying, 1 year ago. And it does not, give a good picture in terms of the ability of consumers in Nigeria to respond, because their income levels have not increased in the past 12 months. We cannot say that income has really improved, generally speaking, in the past 12 months. So that's the reason it is a call for worry in my view. And I think there is need for the monetary authority and also the fiscal authority to do something to ensure that we see a deceleration in inflation in the coming months.
Well said indeed. But let's look at the reactions from businesses. How do you think businesses will react to this new inflation report, and what change is this likely to offset in their input costs and operations? Because if you look at it, it will seem that businesses have been increasing their input costs over time.
So if we're looking at businesses, I think one good thing that we should all bear in mind if we are looking at businesses is that the impact on businesses, comes in several, versions. The first is around their operating cost. The second is around their interest, cost, because when you have inflation being elevated in any environment, the only way the central bank, or the major way the central bank in that environment or country can fight inflation, is to increase interest rates. And when interest rates goes up, the cost of borrowing by companies goes up. When the cost of borrowing by companies goes up, what eventually happens is that they would like to pass the cost increase to the end consumers, and that is where we will see higher prices of goods and services, from companies generally. And when they have higher cost of financing, what will likely happen to them is lower profit margins because of higher, interest cost to them. And the only way they can respond is just to pass, the price increase to consumers. And my sense is that the Monetary Policy Authority, the central bank in this case, needs to be a lot more aggressive in hiking interest rates, a lot more aggressive in reducing the excess liquidity in the financial system. Let me throw in some numbers in this case. OMO is what we call open market operation, which is one way in which the central bank reduces liquidity in the financial system. So far this year, the central bank has sold only about 627 billion in OMO this year, compared to about 830 billion that they sold in OMO in 2022, which means we have a 24% decline in the level of OMO sale by the CBN. And naturally speaking, one would expect that in an environment of higher inflation, the OMO sale by the central bank should be a lot more compared to what we have in this case. That will help to reduce money supply to the system. Money supply is partly what is, driving our inflation, apart from the, cost elements that we all recognize and around energy prices and so on. So I expect the Monetary Authority to respond accordingly. But I think what Nigerians and businesses, generally speaking, should look forward to is higher interest rates to correct this trend in inflation. And by the time we are done, there are high chances that inflation will begin to moderate. And then, if sustained, the central bank will then consider cutting interest rates. But that is not going to happen this year, most likely the second half of next year, in my view.
Okay, let me take you up on the issue of excess liquidity that you talk about. Don't you think it will be counterproductive if you ask the CBN to mop up excess liquidity in the market? Because quite a lot of experts are saying that there's a need for liquidity in the market. There's a need for liquidity, more money in the system so that Nigerians can have more money. So how do you balance the two?
So the responses of central banks across the world is, in many cases, or let me say their mandate is to ensure price stability. And what we currently are facing in Nigeria is a case where prices are going above the roof. And the only sort of, tool that the central bank has in this case is to use interest rates, number one. Another tool that they have is to reduce the level of liquidity in the financial system. Let us take a look at money supply. Money supply, as we speak, is elevated by 36% on a year to year basis. Taking a look at the latest figure released by the central bank. So for September, for instance, it was up year on year by 36%. And that partly fueled the over 44% increase that we saw in private sector credit. So when you see money supply being elevated that way, you are likely to see your inflation number go higher. So to address that, you will need to reduce the liquidity in the financial system. And that is one tool that the CBN has to use or utilize in this case to reduce money supply in the system, to reduce excess liquidity in the system. There are times that we need excess liquidity in the system to underpin economic growth, but this is not such a time. You cannot be increasing liquidity in the financial system and be expecting your inflation to be lower. It does not work that way. When you have higher inflation, you are expected to reduce liquidity in the financial system so that speculative demand for money reduces. And at that point, you will most likely see your inflation number go much lower. Let me also sound this, that Nigeria and Egypt, among the 20 economies that we track globally, are the only two countries where inflation has continued to be on the rise. The other 18 countries that we track have begun to see moderation in inflation, largely because they have elevated their interest rate significantly to ensure stability in prices in their economies. So okay. Nigeria is yet to gain traction on that front.
All right. Point noted, Mr. Ibrahim. Let's also look at some other development now. We've seen the latest Purchasing Managers Index from the Stanbic IBTC Bank showing that the business activities in Nigeria's private sector contracted in October, dropping to 41.1%. From the 51.1% recorded the previous month of September. So what does this mean for the economy, especially the private sector? And can the country improve on this reading in the coming months?
I think what it simply means, is that economic activities were much lower, the last month. And what it also implies is that the GDP growth in the third to final quarter of this year may not be as strong as what we saw in the second quarter of this year. But I think, it is also partly reflective of, the price levels that we have in the economy. Talking about inflation here, when you have broadly higher prices, it is unlikely, for investments to be emboldened in such a country. But all these elements, to my mind, are what we are going to face in the short term, because we cannot really run away from them. So businesses most likely are going to see a slowdown. But is there a positive expectation after this from like 2024? I think yes. By that time, we should have achieved some commendable level of moderation in inflation on the back of monetary policy tools being deployed by the central bank, and also partly because we see the government beginning to spend on infrastructure to address the structural problems we have around inflation.
Okay. We saw most companies, had to increase their staff salary to cushion the effects of the subsidy removal, and by so doing, increase their input costs, like we talked about earlier, which has somewhat affected prices of goods. So do you see that happening again this time? And how much is an average, Nigerian consumer willing to pay for goods and services?
I think how much Nigerians are largely willing to pay is largely a function of what they have in their pocket, right? Because if you consider the fact that, I have said it earlier, consumers' pockets are not, swelling. Since we have seen two key elements. Number one is, fuel subsidy removal. Number two is the devaluation of, foreign currency. If you are a Nigerian these days and you do not earn US dollars, the chances of you being poorer is very high, because if we convert your income into dollars, you are earning much lower right now compared to what you were earning 12 months ago. So the need for corporates, for companies to increase salaries is there, and it is a compelling need. But what I believe will not happen is that consumer salaries or incomes go higher by the same magnitude by which they have come down on an effective exchange rate basis. I think Nigerians, will still have to suffer a bit before we begin to enjoy, some of the benefits that, of the decisions made by the government so far in 2023. Companies will have to raise salaries, but it will not be commensurate with the damage that has been done to their pockets by first subsidy removal.
Mr. Ibrahim, I wonder if Nigerians want to hear when you say they will have to suffer more. That looks like, forever. But let's look at, food inflation for instance. Talk to us about why you think prices are high, even in harvest season, out of season, food prices are still very, very high. Why do you think that is so?
Okay, so let me first quickly talk about, Nigerians will have to suffer more. I'm hoping that, that we would be able to just endure, all those hardship. And I'm hoping that the government will also come to alleviate, some of those, hardship that Nigerians are going through. In terms of, food prices, I think, what we should look at, number one, is around security in regions where we have, food production being large in quantity. Regions that are responsible for feeding the country are not, largely speaking, safe. And this is one area that we continue to say that the government really has to look into. The second element to my mind around food prices is exchange rate. Exchange rate has been, has gone much higher, and it is partly because of, speculative development, and partly also because of weaker economic indicators. So if you capture that, you will see that no food seller really wants to take in, losses on the back of, energy price increase, on the back of, exchange rate, devaluation. Everybody really wants to cover their own costs and remain profitable. So those are the elements that are driving the increases in food prices. And in food inflation at well over 30% is a major concern for Nigerians. It's a major negative impact, on the Nigerian pocket. And it is something that the government should really look into to ensure that Nigerians do not suffer, to ensure that Nigerians are able to enjoy the dividend of democracy. It is very important in my view. We have heard about palliatives, but my sense is that all those palliatives will be short-lived. They are not sustainable, and they are not going to, completely neutralize the impact of higher energy prices and, exchange rate devaluation. So we need to fix security. If we do so, we need to ensure stable exchange rate. That is the work of the central bank. And by so doing, within the next, 6 to 9 months, in my view, Nigerians, should begin to, feel the positive impact of some of these policies if implemented, in my view.
Okay. All right. Just before I let you go, final question for you. Some experts have talked about the need to look at other alternatives to support the control of inflation, which is the supply side of the economy. According to them, the current inflationary environment was imported. So what's your position on these, and what other alternatives are there to control this imported inflation as described by some experts? I know just to wrap up quickly on this.
So they are spot on. We have some elements of imported inflation, but the reality and the question we should be asking ourselves is that if we do not import those goods and services, do we have them locally available at relatively competitive prices? And I think that is where the question lies, and it is the area that we should address. And also, Nigerian government should begin to think around our exports in such a way that our exports are a lot more compelling from a value addition standpoint. For instance, we import crude oil without adding any value to it whatsoever. We will not be able to reap the complete benefit of such an export. We export cocoa, for instance, but we do not process it in any major way to add value and earn more on the export front. So you would export raw cocoa and bring back into your country chocolate. It does not make economic sense.
Okay. Well said. I think we'll just have to leave it there. Thank you so much for your time, Mr. Tajudeen Ibrahim. He is the Director of Research and Strategy at Chapel Hidden Ham Limited. Thank you for your time on the program.